Of us are really being challenged with our homework today and really understanding what we're doing. So I'm going to just create this short, quick video to kind of help us out here to understand some of the basics about accounting. Okay, so here's my simple attempt here. So let's say that somebody comes into, let's say we run a store, somebody comes into the store and buys something from us and gives us cash. Okay, they come in, buy something from us and give us cash. So we've received some cash from them, which by the way is an asset, and we're going to take that cash to the bank and deposit it, right? So we're going to make a deposit, starts with a D, thus we are going to debit our cash accounts, start with a D. Okay? When we deposit our cash, we debit our cash account. That's the way it works. Now, remember, this is double entry accounting, so we've only done one entry. We've only done a debit. So what's the other side of this? Well, we need a credit. And a credit goes over here, right? We need a credit. Well, what did we do? We sold something, right? So we have either a sales or a revenue account, whatever you want to call it. It's some type of sales revenue account, which right now, as we know, impacts our equity. It actually increases our equity. Okay, not written very well, but that word means equity. Okay? So that's that transaction. Now, another transaction, we get our utility bill, we get our electric bill, and we go ahead and write a check to pay our electric bill. Well, when we write a check out of our checking account, we are going to credit our checking account. Once again, check starts with the C and a credit starts with a C. We still need a double entry. We still need a second entry for that, right? So let's come right over here. What are we going to debit? Well, we just said, I'm not writing very well today. There we go. We just said it was our electric bill, so let's call that utilities, which is an expense, and expenses right now impact, once again, also our equity in a negative way. Equity in a negative way. Okay? They reduce that. Now, you're probably sitting here going, wait. I do my bank reconciliations, and when I deposit something, my bank statement shows a credit, right? Yes, it does. Why? Because you're actually seeing the bank side of it. And when you go in and you deposit, let's say, $100 into your bank account, the bank owes you $100, right? So it's a liability on their books. That's why they call it a credit. Okay? That's just the opposite of when it's on our books. When it's on our books, it's a debit. It's an asset. And then when we write a check, it's a credit. It reduces our checking account. Okay? So those are our first two transactions. Let's look at one more transaction. This time around, let's say we got that electric bill. Okay? Let's say we got this electric bill, but we didn't pay it yet. And we're not going to pay it for a while, but we still need to make sure that our boss knows that we owe it, right? We want to make sure our boss knows that we owe it. So we're still going to put the expense on our books with the debit. Now we need some type of credit to accompany that. So we owe it, right? So we have an accounts payable situation. I know that's a little tough to see. We have an accounts payable situation, which also then is a credit. So you'll see we've got the debit and credit there. Now, of course, once we ultimately write the check to pay that, you notice once again, we'd write the check and we would debit the accounts payable, reducing what we owe. So now we have most of the basic accounts and how each one is impacted. Note, assets are increased with a debit, Expense equity items are increased with a debit. Revenue equity items are increased with a credit. Liabilities, by the way, this is a liability. Okay. Liability items are increased with a credit. And then just plain old equity items act like revenue items, which are also increased with a credit. Things like owner's capital, things like that are also increased with a credit. So hopefully this helps you get a better understanding of when we debit something, when we credit something, and if this doesn't, always feel free to reach out to me. Let me know how I can help you. Emails are loved. Join me for the office, whatever it might be. I want to make sure you really understand what we're doing. Take care.